Zoom Video Communications is one Cathie Wood stock down 88% that I think you might regret not buying on this dip here. Of course, Cathie Wood is the popular investment manager that runs the ARK Innovation ETF and other ARK ETFs. And in her portfolio, here are the top 10 holdings of her portfolio. And if we scroll down to number 6, we will find Zoom Video Communications, which holds a 5.34% weight of ARK Investment Management's portfolio. So Cathie Wood sees something in Zoom Video Communications stock that she likes a lot, and I agree with her on this one. I think investors might regret not buying Zoom Video Communications on this dip here. Of course, uh, if you look at Zoom's valuation, that might be one reason why Cathie Wood is attracted to it. Although valuation does not seem to be one of her focus points, she's more, it seems, focused on innovation and growth potential rather than valuation metrics. But that's something that I focus on, and I think that Zoom Video Communications valuation is favorable right now. It's trading at a forward price to earnings ratio of 16.06, which is the cheapest you've been able to buy this stock going back all the way to early 2022. Of course, Zoom Video is an innovative growth company with a lot of runway to grow in the future, but an attractive valuation is certainly one good reason to buy Zoom Video Communication stock. And we all know how popular Zoom was during the pandemic. I mean, if you were working from home, you probably used Zoom. If you were learning from home, you probably used Zoom. And so many people around the world uh, got acquainted with Zoom and its technology. Revenue exploded from a little less than 1.2 billion all the way up to 4.4 billion dollars, and impressively Zoom has sustained that elevated level of revenue. Revenue hasn't collapsed for Zoom in the aftermath of the pandemic, even though for the most part students have returned to in-person classrooms. Workers are, working from home for a couple of days a week and working in the office for a couple of days a week. So, we're probably Zoom is still getting used more or less. Um, of course, not as frequently as during the pandemic, but revenue has kept up. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. What has been hurting Zoom is operating profit. You see, operating profit was approaching 1.2 billion before falling to 245 million in its most recent trailing 12 months. So what's happening with Zoom is that it's still making sales, it's still capturing revenue, but it's needing to work harder to capture that sale and that revenue. So it's needing to hire more salespeople. It's needing to advertise more. Maybe it needs to offer more support services to attract those contracts. Maybe it needs to offer more incentives, more discounts, more supplementary products to get that sale. And so that's been what's hurting Zoom is the profitability, not so much the revenue. So in the near term, that will likely remain the case as profit will remain constrained as we, return to the office and return to school, and that becomes more persistent. And offices, Amazon just told its employees to come back to the office 3 days a week, and many others are following and calling people back to the office for more and more days. So that's going to continue pressuring Zoom in the near term. Although longer term, it can continue to add new avenues of growth. And one area I'm excited about is call center. Call center, right? When you call some of these phone support services, it would help to be able to have that video chat feature instead of just being on the phone. For example, if I'm calling Apple, and I want to, show them something that's going on with my phone, it would be useful to have a Zoom video chat to show my phone and what's going on, and for the person on the other end to diagnose what's going on. And I can have I can give several examples of where it would help to have a video chat instead of a phone conversation. That's an area that Zoom is focusing on, and that's a catalyst for growth longer term. All right, so that's all I've got for this video. I think Zoom video communications is one Cathie Wood stock down 88% that you might regret not buying on this dip. The valuation is favorable, forward price to earnings at 16. So I think you might regret not getting it at this valuation. All right, that's all I've got for this video. Thank you so much for watching. I really appreciate your viewership, and I hope I'll see you again sometime soon.